Hello, Oracles. So we had a little bit of a sell-off today in the market. Not a big deal, nothing major. We've had quite a bit of an upward movement over the last week. So we were due for a little bit of a sell-off today. So something that I look at market-wide right now is the fact that while, yes, we are still in we'll call it a negative macro environment, we still have the Russia-Ukraine situation going on. Obviously, high inflation, interest rates going up. But all of that negative news is already priced into the market, and it seems like right now many companies feel comfortable announcing new different things that are going on, and it's kind of feeling like the sentiment in the market is more positive, despite the fact that we do have underlying negativity. So we've got Nvda announcing an omniverse for developers, Tesla's got Giga Berlin opening, and then they have the GigaFest coming up in a couple of weeks. We've got Google and Amazon both announced splits. So a lot of positive catalysts coming, company-specific stuff coming in the market. So let's see how this plays going into earnings. So we're going to have earnings season coming at the end of April. And it kind of seems like we may have some sort of positive sentiment momentum going into earnings season. And now obviously there is still a lot going on. Many different things could happen. We've had several black swan events that happened this year. We've had, lots of different negative things. It seems like every time the market seems to run, the carpet gets pulled out from underneath us. So we'll pay attention to this going into earnings. For me, the way I play my portfolio is when the market is going up as we have been, I just do my dollar cost average on a daily basis, but I don't add extra. What I do is I keep the cash that I would normally invest and I put it in the side in my cash reserves. And so for me right now, based upon my amounts, it's about $40 every week that I put just into my cash reserves, and I let that build up. Now, when we start to look at percentages in the stock, so I like to have 5% cash in my portfolio. I currently have 5.8% cash. But while the market is going up, I don't want to use that cash to spend it because the cash itself, its value in my portfolio, stays the same. It doesn't take inflation into account or anything like that. So the dollar amount stays the same. But as the market climbs and my portfolio grows, the percentage of cash in my portfolio shrinks. So I just keep on adding cash to it. I keep adding. Eventually, if the market continues to go up, my cash will eventually be below 5%. So this is where I just keep on adding cash to it. The reason I do it this way is because the market going up, eventually we're going to hit a point where it does need to pull back. When it pulls back, that's when the trigger will go off and all of a sudden I will have more than 5% cash. So just like we went through with, when Elon was selling and Tesla was coming down, or, after the mid-January market crash that happened, all of a sudden I had an overabundance of cash because my portfolio came down so much. That was my sign to start investing and dollar cost averaging more heavily into the market. Obviously, we don't know how long it's going to be going down. We don't know how long it's going to be going up. But as soon as it made that turn, that is when I was like, oh, that's my signal. I'm going to start dollar cost averaging. This last time around, we did come down very hard. So I was dollar cost averaging a little bit heavier than I should have. So as we got towards the bottom, I didn't dollar cost average as much because I had spent so much cash earlier. I'm not upset with myself on that. It's a learning lesson for me. I'm still reaping the benefits of that dollar cost averaging right now because my portfolio now is higher than it ever was before because I had invested in dollar cost averaged on our way down. So next time this happens, I will just make sure for myself to go lighter initially, and then as soon as I start to see the turn coming back up, then I can dollar cost average a little bit heavier. That's my lesson learned for the dollar cost averaging through what we just went through. And quite honestly, playing the percentages in this manner really helps me take my emotions out of the market. I literally just see the percentages of what I want each stock and each section of my portfolio to be, and as soon as it's not at that amount, I either add more or I take some out. It's really quite simple. Now, it's a little bit different if you can't fractionally trade. Fractionally trading makes it super easy. I just go strictly with dollar amounts, not a big deal. when you're dealing with, full shares and you don't have enough to be able to change your portfolio in that percentage manner, does become a little bit more difficult. So you have to play with it differently. Then you have to do a little bit better timing of the market, maybe pay attention to, different signals of, hey, where's my resistance? Where are my supports? Are we in a wedge pattern? Lots of different things to monitor there. But if you're able to fractionally trade, just go strictly with dollar amounts. It's super easy. Or if you don't have that opportunity, just use your cash. Just go buy a cash or your portfolio and just let your cash sit there and build up until you have more than 5% and let the market determine whether you're going to dollar cost average on the way down more, or if you're going up and you're just going to keep on adding to your cash reserves. Now again, I am not a financial advisor. This is just what I have done for my own portfolio. And as I said, my portfolio now is higher than it's ever been before. And we haven't even gotten ourselves back to where we were prior to the market coming down in mid-January. So this just is a testament to dollar cost averaging and the benefits you can get from it. And because of dollar cost averaging, my portfolio has gone from down 17% at the end of February to down just over 3% here in March as we speak. Now, yes, you're going to ask, well, how is it possible that my portfolio is higher than it's ever been, but I'm down 3%? And it's all because of the fact that for me, I base mine off of organic growth. And so I don't like to go by, I could just dump in $10,000 into my portfolio and say, hey, my portfolio doubled. No, I don't like to do it that way. I like to go true gains as to what I have grown my portfolio. And based upon organic growth and actual growth on top of what I have added to my portfolio, I am down 3%, but my overall portfolio is higher because I have added extra cash. But because I added extra cash while we were on a dip and I dollar cost averaged, my percentage is significantly higher than it would have been had I not done so. And I'm actually going to be doing a little bit of a test here. So talking to Slim in the comments, he had mentioned the fact that, he's anticipating a market crash coming up in the future this year. So waiting and holding cash until that happens to be able to invest at that point. I do not have the same sentiment, so I am just going to dollar cost average the way I have been. And if we do end up getting that crash, I will dollar cost average the way I had done previously. But again, as I said, I will do it the other way around, and I'll do it lighter at first and then heavier as we go further down. And so next year at this time, we're going to take a look at our portfolios and see which portfolio performed better at that point. And there's nothing wrong with either strategy. He's got his reasons behind it, and there's nothing wrong with that whatsoever. So we're going to play this out, see what happens over the next year, and then we can have a true test to see what is a better strategy, whether it's trying to time a market and anticipate what we think is coming up, or dollar cost averaging into it. So we'll play it out and see. Let me know in the comments below, how is your portfolio looking today after the last week that we have had of running up in the market? Let me know how your gains have changed. Let me know how your portfolio has grown. And I would love to see what strategies you had been using to get your portfolio to where it is now. Thank you all so much for watching. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. I am over on Twitter at OracleTim1. I share all of the latest Tesla news, pertinent stock market information, and all of my daily trades. Thank you so much. Have a great one.